All right, welcome everybody to the Historical Analysis Masterclass featuring John Boik. We'll be doing a short and sweet introductory interview today to let you guys know a little bit about his background, where he's coming from, and the extensive research he's done on legendary traders, monster stocks, and the market cycle. So, John, thanks so much for doing this with me here today. And as always, it's a pleasure to talk to you.
Thanks again, Richard. Thanks.
Yeah, sure thing. And I think to kick things off, I think it's always great to hear about how you first got interested in the market. So, yeah, walk me back to when you first got interested in trading and kind of your early days with that, and how you've developed since then.
All right, I'm going to go way back. This is just a 1-minute story, but I think when I was about 12 years old, because I still remember this, I think that planted a seed for me. Me and my best friend across the street were sitting on his porch, and we were talking about what we wanted to be when we grow up. And we started talking about what our dads did. And his father owned a convenience store, and he did pretty good with that. But they always seemed to they would go to Italy, and so we were very middle class. So no one was taking trips like that when I was a kid. So it was always like, how come you guys go to all these great places and you had the nicest car on the block and all that? So, well, my dad, the stock market, what is that? Because my parents didn't do that. And so he just described it. He said he owns Kmart, and Kmart was where, when we were boys, that was where we hung out. That was the cool place to go. So I said, wow, he owns Kmart. That is the coolest thing I've ever heard of. He's, well, he doesn't own Kmart. He owns the stock in Kmart. And so he kind of described, as 12, you're sitting there going, what is this all about? But the fact that I still remember that, and that was so long ago, maybe that planted the seed. Because I remember saying to him, actually, too, I said, I think I'm going to do that someday. That sounds really neat. So fast forward in college, I was a finance major. I liked business, and I was reading the Wall Street Journal and took investment courses, and the stock market was my main interest. So graduated from college, and then my first job was I was a stockbroker at Oldie Discount Stockbrokers. He was the biggest discount brokerage house at the time. This is the mid 80s, so this is a long time ago. I got to work with Ernie Oldie. You don't know who he is. He's a colorful character. He's passed away since, but what a guy to work with. And so I worked there. I worked in the quote department and the order department. And since it's a discount firm, you're just processing orders and all that kind of stuff. But he lets you train there. And if you wanted to, you could study for your Series 7 and Blue Sky Laws exams to become a full stockbroker. So I did. I passed those on the first try, and then I went off to a full service house. And it was the worst thing I think I ever did. Mostly because I didn't know any rich people that were going to let me manage their money. So it was dialing for dollars and just cold calling all day, 200 calls, they marked them off. And even if you got somebody who was interested, you were just taking the sheet that the brokerage house gave you and said, sell them this. And that was it, sell it this. And you don't even tell them when they owned it, when they should sell it. There was none of that. Mm-hmm. So I got so disgusted with it. I just hated what I was doing, and I left the industry. But I always kept the research side. I should have stayed in the industry on the research side and got out of the sales side. But I kept doing the research on the side, and I went into managerial finance for my career as a financial controller. But I was always reading books. And I remember reading the Wall Street Journal through the mid to late 90s, and the market is taken off. And so the Wall Street Journal, all they say was the Dow went up 200 points yesterday, or whatever, or it's up 30% this year. And that's all they tell you. And I'm like, I'm not participating in this at all. So I was like, I'm watching CNBC, and you're buying a tip, and they don't tell you anything what to do with it. So you buy this. I didn't know what the market was doing. I didn't have any clue. And of course, that was a total disaster. And then I went on a business trip one day on the plane. Somebody had left in the pocket in front of in the seat a copy of Investors Business Daily, and I picked it up, and I was like, "What is this?" I didn't even know what it was, and I read the whole thing on the plane. I was like, "This is everything completely opposite of what I'm doing." I came home, I researched IBD. I found out about William O'Neill. He had this book, How to Make Money in Stocks. I ordered the book. I got the book. I read it. I read it once, and that's a book you have to study.
Yep.
So I read it once, and 2000, the market's ripping in April, and I'm kind of buying some stocks that were featured in IBD, but that was it. And then when the market turns down, I held on and round tripped that whole thing. I was up pretty good for a while, round tripped that whole thing and gave it back. And I was like, what am I doing wrong? Oh, I only have part of the picture here, I think. So then I really started to, that's when I started to say, I don't ever want to do that again. How do I stop doing that? Or did anybody else do better than this? And then I reread How to Make Money in Stocks a couple times. And then I started following O'Neill's path backward. Like, who did he learn from? And who is this guy? Mm-hmm. And God, he's got all these companies. He must be doing great. And in the books, he talks about how he made this great trade in the 60s, the 70s, the 80s, the 90s, and it's 2003 or whatever by now. And so I was like, so then I started buying, and I had read over the years, probably a couple hundred stock market books. I read them once, threw them off to the pile, that kind of thing. So I started reading what O'Neill recommended, which was Darvis's book, How to Make Money, How I Made $2 Million in the Market. Who's this Gerald Loeb guy? I ordered that. Bernard Baruch, Jesse Livermore, all that stuff. And those are the ones that turned the light on for me, especially Darvis's book, because it was such an easy read and it just made so much sense to me. And all the errors that he was making at the beginning, I was doing the same thing, taking tips off of TV, CNBC, and trying to get newsletters from brokerage houses or whatever I was doing. It was just all a mess. So I kept learning more and more, and I kept referring back to these books, those like 5 or 6. I said, this is interesting. All these traders learned from each other, and it goes all the way back to the early 1900s. And they're all similar. Mm-hmm. And they all weaved in and out of these markets and protected themselves in bad times and really hit it big in good times. So I take things off my shelf all the time. And then I just said, how can we put all this together in one place, one concise book? So I just said, maybe I'll do it. And I remember talking to my mother. She said, what are you up to? And I said, I'm thinking about writing a book. And she said, this is great. Mother's gonna be great. She goes, that's a great idea. Do you remember when you were 15, you won a national scholastic writing contest? I said, what? I don't remember that. So she said, I'm gonna send you the letter. She kept the letter. She sent it to me in the mail. I have it in my desk. I'm like, I don't even remember what that was about. So I put the book together and I went to Kinko's, which doesn't even exist anymore, printed up a paperback copy, put a letter in there to William O'Neill, and flew out to California and went to a advanced seminar for him. I went to one other before, but this was an advanced seminar. And I kind of stalked him, and because I wanted to hand him the book. When I first got there to register, the IBD people were saying, well, we'll take that and we'll give it to him. And I said, no, you're not. I
didn't trust him.
It wasn't that. It was like, I didn't fly halfway across the country to take a chance like that.
Right.
So during the first break, I watched him. There were probably, 500-600 people there. It was a big auditorium and a big hotel. And he went around to the side and I just took off and hopped a rope in the back. He had some security and I kind of went around that. And there he was. And I had like a minute before security said, who are you? So I handed him the book and I just said, he looked at the cover and it was all his mentors. And I had it called The Greatest Stock Traders of All Time. McGraw-Hill changed the title a little bit, but he was like, this is kind of interesting. And I said, Mr. O'Neill, if you could have 5 minutes of your life to look at it, just tell me there's a letter in there. If it's worth it, should I throw it away, whatever. And when the seminar was over, I watched him leave, and he still had the book in his hand. So I was excited that he didn't burn it at lunch. So I was like, I still have a shot. And it was interesting because 1 month to the day, McGraw-Hill called my house. My wife says, some guy from McGraw-Hill's on the phone, wants to talk to you. So I called him back, and he was like, yeah, who are you? We got this book from William O'Neill, and he wants us to publish it, and whatever he wants, he gets. You know, he's a big seller for them.
Yeah.
So I said, you know, I'm a nobody. And they said, yeah, we know that. So then it was like, how did you come up with the whole story there? So,
yeah.
And the book came out, and O'Neill was so kind. He did the edits, I have all his hand edits from the book. When it came out, he put it on the IBD website he tried to help me market it, because he had never promoted a product that he did not write or his company did not write. So I was very proud of that. And the book did very well. So Barron's named it one of the top 25 books of 2004 when it came out. And because of that, senior editor calls me back. He goes, hey, rookie. He goes, this is how we look at you. You stepped up to the plate on your first at bat and you hit a double. So because of that, you got any other ideas? And I was sketching something out already. And that's the second one, which goes through the whole market cycle history.
Right.
And while I was putting that together, the IBD did a full page ad on this guy named Jim Roppel, how he killed it in 2000. And I'm like, I did the complete opposite. Like, I got to find out who this guy is.
Yep.
So I went to another session of IBD, and I thought Jim would be there because it said he goes to all these sessions. And this was fairly soon after the article came out. And there was a table. I saw this big group around there. So he's got to be in there. And then a picture of him in the article. So there he was. So I went up to Jim and I said, hey, William O'Neill's got me published on this first book, and I'm working on another one, and I would like to feature your story. It's so inspiring. It needs to be told other than just in the paper for one day. And Jim, if you know, he's just the most energetic, the coolest guy. He's like, hey, yeah, let's talk after the class. And I noticed Jim, because there's, again, 400 or 500 people. So I'm watching Jim during the class. He's in the front row, right in front of O'Neill, taking a million notes. And I'm like, gee, no wonder why this guy's in the paper.
Right.
So we met after, and we went to the bar and had a few drinks, and he said, yeah, I'll do it. I want to do it. So then I flew out to Chicago, where he's from, a couple of times, and just sat and watched him and wrote his story. And he's just been a great inspiration for so many people. So, and then that did good. So I rolled into Monster Stocks, because that's diving into the third segment of history. Mm-hmm. I want to say this too. History is interesting because I couldn't stand history in high school and college. Art history world. It was the most boring, dry thing I ever went through. I think a lot of people feel that way, maybe. But when I started reading all those books on history in the market, everything connected. And it was like, it's not just dry old history. You learn it and you push it off to the side. All those traders took that knowledge from prior history and used it in their current day. And that's what this whole masterclass is all about. That's what all the books are about. Mm-hmm. They had this string of knowledge base they learned from the three parts of historical analysis that I like to talk about. The market cycles, and we've seen other traders. Stan Weinstein used it to create his stage analysis. You have the great traders that all learn from each other. Mm-hmm. And they all took, the strategies are similar, and then they tweaked it to their own personality to make it a strength of their own. And then there's the great stocks, and no one did better than that than William O'Neill. Every major monster stock, true market leader that he nailed in every single decade for every single uptrend, he always had a precedent from a prior period that he was either in it or it was back to 1910. It didn't matter. it still looked the same. So he did it. So I was like, this is interesting. I don't see history in another subject where you can connect all those dots and actually use it to your advantage in your present time. So I just wanted to add that. So that's how the books came about. And then, it took me a long time. I still research history. So I'm going on 20 years of research in history. I wrote another book last year because Monster Stocks had ended, I think, in 2006. And I've had some requests over the years. Why don't you fill that gap in? And Monster Stock Lessons is just 2020, 21, but the master course fills that whole gap. Yeah. So from 2007 all the way through today, I filled it in the class. So we don't miss, there's not one year from 1900 through today that is missing. And I mean, it may just be inside of a downtrend or an uptrend. And we don't go through every year. I'm not going to bore everybody like that. But every year is accounted for in the class.
Yeah, and could you touch on, because I think it's such a tremendous resource, the kind of textbook resource that you've created for the class, and maybe some suggestions on how students can best use that, resource.
Well, I don't like to talk about myself too much, but I do think one of my strengths is organizational, how I organize the books. They're all in a chronological order. So it makes it, I think, an easy read. And if you go through some of the best, like Darvis's book, it was a chronological order of, I started here and I made all these mistakes. Then I started to make some improvements. Then I really made some improvements. And so what I did writing those is I started with the earliest trader, Richard Wyckoff, and went through like Livermore and Baruch and Gerald Loeb. So you can see the string of time go by. Mm-hmm. And I want you to feel like you're in that time era while you're reading it. Mm-hmm. But the course document is in a summarized fashion, so it doesn't bore everybody. It's bullet of every single uptrend from 1900 through today. There's I think there's 34 or 35 of those major uptrends. And I just do a bullet, like a paragraph or like 2 or 3 sentences. What was the catalyst of this uptrend? What caused it to be an uptrend? And I do the downtrends. There's 22 downtrends. And what caused this? You're going to see in the document almost every single time it's high inflation and high interest rates. And we saw that in 2022. But it goes back to the 40s. And every time in those decades, there was a high interest rate, high inflation, low GDP, economic environment. And it's a major impact on the market. So the document is laid out so where you start from the beginning, and then it talks about all of the things, the 3 things that made that market era what it was. It's the market cycle you're in, who the greatest traders at that time were, how did they maneuver in and out of it, and when they were in it, what stocks were they in? Right. Every single one of those great traders landed the major leader in the major uptrends of their era. Is that a coincidence? No. That is, and they tell you in their published books how they did that. I wouldn't have done it, or wouldn't have known what to do if I didn't study the market cycles before, the traders before, and the best stocks before, because they all have similar patterns. They're not exact. They're never going to be exact, but we see it today. 2022 is just like 1981 that I talked about on IBD. And then it looked like 1994, and it looked like 1946. Because you had high interest rate, you had high inflation, and the Fed was trying to bang down inflation by hitting the brakes, by increasing interest rates. They're only going to do that because that's the way you decrease the money supply. So they've done it. And here's the other thing. We see it again. They're always late, and then they always overdo it, whichever way it goes. So here we are. We're seeing it again. So if you understand how that worked in the past, what a huge advantage. Let's go back to me. When I was in, I didn't even know what the cycle was doing. I didn't have a clue what, does this stock look like this one from that uptrend in 1983? I had no idea what that was. But now, this is a reference guide to always go back. If O'Neill did that all the time, and he was the greatest trader in my book, in my opinion, and Nicholas Darvas did it, he studied that, and Gerald Loeb did it, and Livermore did it, and Baruch and Wyckoff did it, and they're the best traders of their eras, of all time. If they did it, I've said this repeatedly, but this needs to be mentioned. What struck me the most was the elite traders, the best ever. They added historical analysis to their toolkit. And I've said this too, you don't hear a lot about it, but once you master fundamental analysis and technical analysis and psychological analysis, now the psychological side, I will say, is the most important key because it has so many other pieces to it. But historical analysis, once the great traders did that, that added knowledge of history before, it's all over their publications. I wouldn't have seen this if I didn't look back and saw that it looked similar to that. We're seeing the same thing right now. I said this on IBD. This could be like 95 when the internet was starting to build out. This could be, if AI is the next big thing, there's a similar pattern. If the Fed stops raising rates and we get inflation contained, this thing could take off. It's done that many times in the past, but we could still chop or go down if inflation just refuses to let go and the Fed really pounds it till they break something big. So that's kind of off topic, but
no, that's good. That's good. Let me jump in here, and you've already, of course, mentioned a lot of the books and mentors and resources. But of what you haven't mentioned, or maybe focusing on a few, what books, people, traders, and other resources have had the greatest impact on you personally for your trading? Maybe just name a few. I know. I think the last webinar will go through a lot of the recommended resources.
Yes.
But anything to touch on here?
Well, How to Make Money in Stocks is O'Neill's classic, but actually, I think what I prefer is The Successful Investor by him. It's kind of like it's kind of like a Darvas style edition where it's condensed more down to the certain most important facts. And he wrote that book because the bear market of 2001 and 2 killed so many, just slaughtered so many accounts. That's a great reference. This is The Successful Investor by O'Neill. How to Make Money, How I Made $2 Million in Market by Darvas. That's a given. You have to read that and understand that inside and out. But he wrote another book in 1977 called You Can Still Make It in the Market.
And this is Darvas, just for everybody.
Nicholas Darvas. He wrote some other books, but that one is one of my favorites because he used the same strategies in 58, 59, where he made so much success. He waited out that brutal bear market in 73, 74. And then when it came up in 75 and 76, he was all over it. And he had great success doing the same thing he did in 58, 59. The key there is he didn't change his strategy. He kept to what worked for him. And it works for all the same great traders. So those are, and then, of course, I mentioned this a lot. Trading in the Zone is just, that's one of the best market books ever. It's the psychological side of it. And it just, some people think it's difficult. There's some chapters in there, but if you focus on the real core chapters in that book, there's such great messages in there. I think that, to be honest, I think I've read that book more than any other book, to be honest with you, because this is working on your mind. And I've said this before too. It's really not you against the market. The whole market is you against yourself. And every time you make mistakes or you make excuses, it's really your issue. It's not the market. You have to move in and out with the market, whatever the market's doing. So you have to master yourself. And Trading in the Zone is the one. Another one that I post a lot on Twitter is The Perfect Speculator by Brad Kodeshwar. It's a fictional story. It's kind of like reminiscences, but it's a shorter story. And it just, what he did was he said, what would the perfect speculator look like? What would they do if you still make mistakes because it's a human being, but what do they do? And it's such an easy read. And it's just so, I think I highlighted that book. There's more highlights in that book than there are non-highlights for my copy. I was like, this is the greatest thing. So that is a phenomenal book, and that's one of my favorites. And then Richard Wyckoff's stuff, Studies in Tape Reading, which came out in 1910. If you get that book, when you read that book, there's no way you're going to say this was written 113 years ago. It's so relevant to today. I mean, some of the stuff, when he talks about the stocks, yes, those are going to be railroads and steel companies or whatever. That's about it. But the strategies, the theories, and all that kind of stuff, totally different. And it's just so relevant. Well, I'm getting off course a little bit, but I need to add this. This is so critical. When I studied the market and investment courses in college, it was all about academic theory. There was not one mention of, has anybody been successful at this other than, Warren Buffett's name may have come up here and there. There was no mention of how market cycles work, how the best stocks look, how the best traders ever did that. That's why I struggled for so long, because I was like, if that's the knowledge that I'm given, and I'm like, well, this is a great university, so I'm going to believe it, right? And if you're unaware of what else is out there, all of the great stuff was like, it was like hidden from me. So until I found the IBD paper and then started getting into that and then backtracking it all the way back and then putting that whole line together and saying, this happened in 1900 too, but Richard Wyckoff was kind of like the O'Neill of his day, because he was putting out the Ticker magazine, because the only thing that was out back in his day was the Financial Chronicle, and the Wall Street Journal just started coming out in, I think, 1889. And so Richard Wyckoff was like, these are just like business papers. They're not telling people how the market really works. The Ticker magazine came out in 1907. I am so honored to say I have the first copy of that thing. It's amazing, because it was like, that gave people at the time information nobody thought of before.
Right.
Then Nicholas Darvis, when he was interviewed for Time magazine in 1959, of how he made so much success, I have that Time magazine too. That article, the backlash on that was incredible. Everybody's like, that's not how you do it. You buy and hold. You buy low, you sell high. You don't do what he did. And yet, then he comes out with a book the next year, How I Made $2 Million in the Market. It's a bestseller. But those informational pieces, to me, I wasn't aware of those. So I just kept doing the wrong thing, because until I started digging into it, that's what turned me around. And that's what I want. This document, back to your original question. So it's laid out in chronological order from 1900 through today, who the great traders were. We do profiles on them. Then we roll into the market cycles, and we talk about, here's an uptrend. Oh, remember the profile we did on Wyckoff and Livermore 2 webinars ago? Well, they're in here now. They're seeing this, and they're jumping on this stock. And then we analyze stocks that they did. We analyze them in detail and how they were so successful with their investment. And that's what it's, and then at the end, we wrap it all up, and put it all together. It's like a big puzzle. And at the end, we're like, the last piece it went in, and it was like, look at that. Wow, cool.
Yeah, perfect. And you kind of want to help the students build their own puzzle and do it ideally faster than you were able to by condensing all the information and all that. That's your goal, right?
Yes. Here's the thing. So these traders, Richard Wyckoff lost money. The first 6 years he was in the market, he went completely bankrupt. Jesse Livermore went bankrupt 3 times in his career. Bernard Baruch lost money for the first 6 years of his trading career. Gerald Loeb did not do as badly, but I think his learning curve was like 3 to 4 years. And O'Neill was like 3 to 4 years, not struggling, but not making any headway. Yeah. Okay, till he put that system together. Nicholas Darvis lost money for 6 straight years. Jim Roppel lost money for 6 and 7 straight years. And Mark Minervini lost money for 6 years and had nothing. Like I said before, is there something magic to 6 years in the market to start out? Maybe, but why, for the new traders, why do you want to go through 6 years of, your losses teach you more than anything. So you have to take, and you're going to take a lot of those. But and these traders studied the ones before them, it's almost like, why didn't you pick that up and shorten your learning curve a little bit more? And I'm not trying to knock these are great traders, the best of all time. But my goal would be I researched all this from all the best ones, found out all their mistakes. And for every profile in the course of all these great traders, there's a section on their failures, their mistakes. There's, of course, a much bigger section on their successes. But we talk about the failures and what they did wrong and how they turned themselves back around. So all this is in there. And the goal is to, especially if you're new, shorten up your learning curve. It's a 230-page document in summary form. The whole history of the market is in one place. And trust me, 20 plus years of doing this research, do you know how many books I had to read and reference to make that? A lot. So I'm just saying that, and there's no other resource that put it all together. If there was, I wouldn't do this. So, I mean, that's the goal. It was to put it all in, put it in chronological order, so you can see, wow, this connects. It all connects all the way through. Mm-hmm. A lot of the uptrends were similar. The downtrends were similar. The great traders then, once they were experienced enough, if they didn't short stocks, and a lot of them didn't, they backed out. Why? Because they saw the same topping signals in that time frame they saw earlier in their career, or one that was referenced by one of the great traders before them. We saw that 2022. I didn't do much in 2022 because I saw this thing coming down, and I would have no clue if I didn't do this, or I didn't know about those downtrends in the past. I would have been doing what I was doing in 2000, still hanging on, buying things. CNBC during 2000 bear market, that's all I was doing was watching CNBC pretty much. Guess what they kept saying? Buy the dips, just buy the dips. And you bought them and you got slaughtered on the way down. Well, bear markets don't end like that. You don't buy the dips. You wait till it works. And there's all these clues, and they're all in the course. Mm-hmm. And they all look the same. The 2022 bear market, you had these bear market rallies, short rallies, running up into the declining 200-day moving average. You had the 200-day moving average above the 50, the 21, and the 10. Complete opposite of what an uptrend looks like. Right. And a complete opposite of what we have now. But if you don't know that, and if you don't understand that, and if you don't say, is this a bear market? Well, I really don't know. What does a bear market look like? What is it? What are its characteristics? Well, there's really just a handful you need to know about. Is there any leadership that's just ripping higher? In strong uptrends, you have the leaders going up 100, 300, 500, sometimes 800% in a year. Okay, we weren't having that in 2022. You had the moving averages upside down, and you had the new lows, the new 52-week lows exceeding new highs on a almost daily basis, 80% of the time. In 2020, during that uptrend, everything was the complete opposite. You had 78% of the day of the trading days were new highs exceeding new lows. You had the 200 down here, the 50, the 2110, and you had leaders coming out all over the place. I said this, 29 of them in Monster Stock Lessons I showed, that all at least doubled in 8 months. So if you don't, the course is to give you this as it's a timeless resource. 20 years from now, you can reference back to it and go, wow, this looks like that. That's what the great traders do. And why do you want to reinvent the wheel? Just follow what the best of the best ever did. Get that historical knowledge. You can have it here in what, 5 weeks? We're going to do it in 5 weeks. There you go. So you don't have to buy the 150 books that I had to buy to, I took a piece out of this one, a paragraph out of that one, and, you know, so that's what I want to do. Yeah. I love the research side. It's my passion. Actually, I like the research more than the trading, but and I want to pass this on if I can, you know, it's not something I made up. This is compiling factual data and stringing it together to complete the puzzle at the end. And it's amazing because the market repeats itself over and over and over again. The cycles, the monster stocks, and there's going to be great traders. Richard, I'm sure, let's say this. 20 years from now, I'm going to update this, and Richard Moglen is going to be the greatest trader in history.
That's the goal. That's the goal.
Look at the knowledge you're gaining. Just, Richard, if you want to just say a minute, if you didn't interview all these great traders, if you didn't research, if you didn't hear about the history and all this information, where would you be? I mean, if I was your age at your stage, I'd be the best one ever. But yeah, you will if you continue this. I mean, it's incredible.
Yeah, I've been pretty lucky. I think I placed my first trade in late 2018 in Robinhood, and then I got the chance to take the class from Dr. Wish, who really he had us read Darvis. He had us read Mark Minervini's book, David Ryan, and I think he said that he wasn't profitable until he read Darvis. So that's the impact that this can really have, and I hope for everybody taking this course that it can have that kind of impact on you. So, John, I want to ask you, for students who are taking this class, what advice do you have for them to make the most out of the experience? During the webinars, during the live webinars, as well as doing the homeworks and exercises. What can they do to make sure that they get the most out of the full experience?
Well, I tried to condense it so it's not too much and it's not dry, boring old stuff. So I'm going to say, soak it all in, take it all in. We're going to answer a lot of questions, ask questions, but really get to know who these legendary traders were. I try to, in a very summarized form, I try to take you through their learning curve and then all their successes after that. There's so much to learn. This may sound odd. Just today, I'm going through the webinar slides of the traders in webinar 1 and 2, just to make sure everything looks good. And I'm reading through this again, and I'm going, you idiot, John, why did you just make this mistake 2 weeks ago or whatever? And I'm like, I should listen to my own stuff more often. But I'm saying, soak it all in. Appreciate what history can give you in this course, in the market, because everything that happened in the past can be applicable to the present and the future. And I think, when we study the charts of the stocks, you're going to see O'Neill and O'Neill's companies, and IBD was very generous to let me use a lot of O'Neill's charts. He put there's so much education from him just in the notes on the charts. We're going to go through those, and I'm going to pound that in and say, this is the best one ever. So listen to what he's saying. And We're not talking, we're talking 7 legendary traders over 120 years. We're not talking 50 different opinions, 7. And then I do 3 modern day legendary traders who have been in the market now 30 plus years, 40 years, the Minervini, the Roppel, and all that. And there's so much to learn, but it's all the same. So soak it all in, keep your mind open, and then be attentive to how many similarities there are all the way through, because that's the key to the whole thing. It's not like we're going to do the 30s and say, wow, this was the thing that happened in the 30s that's so different from everything else. That's not it at all. You're going to go, remember this from the 70s? We saw that in the 30s. We saw that in the 40s. We saw that in this time frame or whatever. Because it always, the market does this all the time. These ups are similar. These downs are all similar. So now the market over time goes steadily higher, which is great. But what you want to do, this is key too, that I want everybody to get. You want to work on your discipline and your patience. These traders all made incredible success stories and profits in the market when they had the patience to wait for an uptrend. And when that uptrend came, they hit it big. And there's a bunch of quotes in there that talk about, and I show a ton of examples of that. They're not in there every day. This is not a day trading course. Mm-hmm. This is an intermediate trend following, some swing trading in there. This is waiting for the times when the market is super strong. And it happens fairly often, in a decade, you're going to get 3 or 4 of those major opportunities. And you could have triple digit years. But you don't want to, when they come down, you don't want to round trip and give all that back like I did in 2000. I had a great year in 2020 and I protected it because I've learned my lesson before, but even that wasn't even it. It was this market topping looks like all the prior ones. What did I do? I actually pulled out my second book and I read it like 2 more times. And I said, yeah, this looks like the same thing. And that's how I protected that. So I want the traders, whoever takes the course, to really understand that and see, I want them to see how important this is. So I guess that's the key. And I want it to help them. I want it to, speed up their learning curve and then see the similarities and, latch on and become, here's what I want to do. I want 6 other traders who took the course along with Richard. There's your 7. Those are the 7 new great legendary traders that we're going to write about in the next 20, 30 years. How's that?
Yeah. Hope so. Perfect. Great, John. Just one last thing. Let's see. One last thing I want to ask you is, having taken this course, and maybe this comes back to the slogan that you've kind of referenced here, but haven't said explicitly. How can this class help them? How can they study the past, and how can that help them profit in the future? Just to close it out.
So the tagline for the course is study the past so you can profit in the future. Got a lot of that so when I was writing Monster Stocks and William O'Neill sent me back his edits and I sent it back. So we were finished. And I said, would you endorse the book, through his people? He came back and he said, I don't endorse other products. Understood. You don't have to, but I didn't take that as a final answer. So I said, I understand that. Can we do something else? So he came back and he said, put this on the cover. It says, study past big winners and you'll buy future ones. So that's on the cover with his name under it on the top of Monster Stocks, the cover of the book. Study past big winners and you'll buy future ones. There. Do you need any more explanation? He did it for over 55 years. That's how he became who he was.
Yeah.
He made, if this doesn't motivate you, he made on pick and save and Price Company in the 70s and 80s. He made $25 million on those two stocks. And those profits launched Investors Business Daily, the newspaper. It costs a lot of money to put out a national newspaper. And that came from two stocks. Those two stocks, he only bought them because they looked like Jack Eckerd, and guess what else of all-time retailer? Kmart. So he bought them because they looked just like those in prior periods, like in the 60s. And that's what he did. And he pyramided them up all the way because they never gave him sell signals to get out. And it's a lot of, what a great success story. So, and every single big winner he had, he did that with. He didn't just look at this and go, oh, I'm just going to jump into this one because everybody's talking about it, or whatever it is. The guy did the most incredible historical research in history, and he used precedences from past periods to become who he was. So, study the past so you can profit in the future is a tagline off of what he gave me to put on Monster Stocks.
Perfect. Yeah, I think that's a great spot to end it. So we look forward to seeing everyone at the live webinars, and definitely come with questions ready. Take a peek at the textbook, the resource beforehand. Yeah, I look forward to it. The live sessions always a really amazing experience. I love seeing all the questions, excitement in the chat. So come ready, come prepared. And with that, we'll see you guys there at the first one is July 8th. And John, anything else to add?
I just want to add one thing.
Yeah.
So the only downside to the asking the questions is I will go on and on. But I think there's a lot of information to it. So Richard he always has to reel me back in, but the questions are so welcome because I'll usually answer it with a historical example.
Yeah.
Just to prove this is what happened before. I'm not giving you my advice. There's nothing coming from me. This is the best of the best. And that's what I'm bringing to you.
Perfect.
So school starts, don't be tardy.
Yep, I look forward to it. So thanks you all for tuning in, and yeah, we'll see you guys at the webinars. Take care.
All right, thanks.